Bonjour à vous tous. C'est un réel honneur d'animer ce panel de leaders de l'investissement au Canada. It's truly a pleasure to be here with all of you. Before I introduce the panelists, this panel is about startups and startup investing. We'll cover some of the best practices and strategies that lead to the creation, growth, and success of startup. But before we get started, let me explain a little bit how we're going to do things here, because startups, of course, claim to disrupt and do things differently, and this panel will be no different. So instead of me asking questions of these panelists and getting them to jockey for who is going to answer the question, what we're going to do is we're going to do what we call a chain reaction panel, inspired by a British talk show, where it'll be a series of talks. And so I'll start by interviewing Janet, and by the way, Janet is the managing partner at Real Ventures. Say hello, Janet, wave. Everybody knows who Janet is now. And then what will happen is I'll go away, and Janet will stick around for 8 minutes, and she'll interview Jean-François Marcoux. Jean-François is the managing partner at White Star Capital. Hello, Jean-François. And then Janet will go away, and Jean-François will interview Thomas. Thomas Park is the vice president, operations and strategy at BDC Capital. Hello, Thomas. And then Thomas will interview me for 8 minutes. And then what we'll do is we'll all come back on the screen, and then we'll do some questions and answers from the audience. So if anybody has questions, people that know me that are watching this conference, please feel free to send me text message, email, go onto the platform, ask some questions on the platform, and the team will certainly feed me with those questions. So I hope that's good for everybody here on the screen. Everybody's happy and ready to go. What we'll do is we'll start with me interviewing Janet. Gentlemen, Jean-François and Thomas, we'll see you back in a couple of minutes. Hello, Janet.
Hello, how are you doing?
I'm doing great, thanks. Yourself?
Great, thanks.
It's always a pleasure to get to see you. So we'll jump straight in, so we keep on time and on track. I want to hear a little bit about Real Ventures, but I've heard, let me try and pose this question properly. I've heard from people at Real that you refer to yourself as a full stack investor. And the term full stack generally refers to developers. So I'm curious to know and have you tell us a little bit more about Real. What is Real, and what does full stack mean when it comes to investing?
Yeah, absolutely. Well, I would say that we are, what I sometimes say is full stack in the early and pre-Series A. And so what I mean by that is that we have a selection of funds and programs that helps entrepreneurs grow and develop their businesses from starting at the college level. So we have a program called Front Row Ventures, which is a venture capital program that is run by students. It is run at 21 universities and colleges across Canada. So that's sort of our entry-level program. We do that because we know that so many of the great tech companies, so much of the latest technology is developed at the university or college level. We then have an accelerator called Front Row Ventures. It is the longest running accelerator in Canada. We've just completed our 13th year with Founder Fuel. And so then we have that accelerator, and then we have a pre-seed fund, and then we have a seed fund. So those really are sort of our full stack. We typically do not lead rounds beyond the seed round. However, we do continue to invest in our existing companies post-seed and continue to work with them and develop them.
So, yeah, there's certainly plenty of acceleration programs out there, plenty of university-based investment arms. But to have that full chain, is that really unique in Canada?
Well, it is unique. And I think more importantly, why is that special? Is that, so if you look, this is 2019 data. We don't have 2020 data yet. But in 2019, we saw 88 of the companies that raised a seed round in 2019 in Canada. We saw 80% of those companies. And so when I think about what that does for us in terms of our ability to see companies and to get that deal flow, to see that company and get that deal flow, it's very powerful. And I think not only that, but then the second thing is beyond seeing the deals, is actually getting an opportunity to invest in those deals or, to win those deals. And what we have found consistently is because of our demonstrated commitment to the ecosystem, because we work with founders really from the earliest stages, we are well positioned. to get into those companies in which we want to invest.
Great. Let me ask you a little bit about the Canadian tech ecosystem and your perspective on it. Where do you see the growth right now in Canadian tech?
Great. So we are seeing, just to on that point, we are seeing huge growth in the Canadian tech ecosystem. It's very vibrant. And we're seeing it across multiple segments, really. I would say a couple of things. First of all, the Canadian ecosystem does tend to be much more B2B focused as well relative to the US ecosystem. As is well known, Canada is very strong in AI. And so we are seeing a lot of AI companies. In fact, in the Toronto Waterloo ecosystem, it has the highest concentration of AI startups anywhere in the world. So we're definitely seeing that. And now when I talk about AI startups, I mean, so many, that can really encompass so many different types of models because so many companies are now using AI as part of their model. But we are definitely seeing that. And I think the third area that I would highlight that we are seeing is really digital health and, really the growth of health, not necessarily, so I'm not talking specifically in life sciences, which is not an area that we focus on, but really just around digital health, health apps, things like that have also been a real growth for Canada based upon both our traditional strengths as well as COVID has not surprisingly accelerated a lot of those businesses.
And, I've known Real for quite a long time now, and you seem to be relatively cross-sectional, but are there particular industries that you prefer to be investing in these days?
To your point, we are very broad. We think of ourselves as focused geographically. So we are clearly focused on Canada. Focused stage-wise in terms of pre-Series A is when we invest. Beyond that, we are fairly broad in terms of the types of companies that we invest in.
Do you have any, I'm sure you love all the companies you invest in, but are there particular companies right now that you're super bullish on that you really love? I guess this is an opportunity for you to give maybe a little bit of a spotlight and a free plug to some of the companies that you're working with today or that you're thinking about working with that you really like. So are there any companies that we should be looking out for?
Absolutely. So I think a couple of companies that I'll mention that people in the audience may have heard of. League is one of our is one of our companies, portfolio companies. It is in the employee health benefits space. It's doing very well. It is growing very quickly both across Canada and the US. Another one that I would highlight is ClearBank. That's been in the news recently, again, doing very well. It's growing globally. Another one I would mention is Benchside, which is using AI to help drug researchers accelerate the rate of the success of their drug experiments. So, I mean, those are three just off the top of my head that are both doing well as really expanding globally and very quickly.
You'll probably be getting a call from the hundreds of others that you didn't mention, wanting to know why they weren't one of the lucky three to be mentioned. But look, thank you very much. That's our 8-minute segment. I cut it a little bit short because I think we started a little bit long, but that was super fun, super fast. I hope everybody else enjoyed it as well. So I'm going to take off now. We're going to pull up Jean-François, and you'll get a chance to interview Jean-François now.
Perfect. Thanks so much. AJF, great to see you.
Great to see you, Janet.
Okay, so I have a couple of questions for you. Can you share with this group some thoughts in terms of how we can be creating more successful entrepreneurs and bigger outcomes?
Yeah, absolutely. At WiStar Capital, we're actually active and involved in several of the fast-growing ecosystems in technology. And what we typically notice in each of those fast-growing ecosystems is that we see more startups being created and more successful outcomes for three main reasons. The first one is access to talent. The second one is access to capital. And finally, I would say it's access to global markets. When it comes to accessing talent, I see this in two ways. First of all, I think in our ecosystem, we need to make sure that we provide all possible incentives for people to start businesses. I'm talking about operators of larger corporations that could find an interest in starting, companies. It goes from PR campaigns about our successful entrepreneurs to, tax incentives, for example. And the second element with regards to talent is with regards to, immigration policy, our global reputation as a country in Canada. We have quite a reputation of inclusion. I think we look good on the global scheme, and it's really driving, access to talent in the country. Well, when it comes to accessing capital, there's a clear correlation between, VC funding or private equity funding and, the number of outcomes and large exits, at least in technology. So it is definitely an important factor. And lastly, access to global markets. I think it's very important that all of our entrepreneurs always have this kind of global mindset, making sure that they're building companies that can address consumers and businesses, around the globe and that are scalable globally.
Great. JF, thank you very much for that. So just building on what you said, one of the factors you just articulated is capital. And I'm interested in your view in terms of what role should government play in terms of, fostering the capital or injecting capital into the system.
Yeah, when we think about, capital, I think it's important that capital comes from the government, yes, but also from, all actors in the ecosystem. Starting with, successful entrepreneurs re-injecting capital. If you look at, Silicon Valley and all, again, fast-growing ecosystems, there is this kind of flywheel where successful entrepreneurs eventually reinvest in startups. So I'd say between entrepreneurs, venture fund, PE funds, corporations, and governments, they all need to be active. When it comes to government, I think government has to be supportive and aligned with the other actors. Government can play quite a big role in financing, the private equity funds, for example, like we've seen in Canada, to make sure that, fund managers that know how to manage and invest capital have means to do it. So I think the government certainly has to play a role, but it needs to be balanced with, other actors as well in the ecosystem.
Got it. Okay. Thank you very much. Speaking of the government, there's, would like to sort of segue into the government defined sort of our clusters of excellence, right? About a year or so ago. And I'm interested in those where I'm referring to the super clusters. And I'm interested in your perspective in terms of, what role do you see of the government of identifying and declaring, hey, these are the super clusters and these are the areas that Canada should be focused on? Is sort of, if that was one end of the spectrum, and on the other end of the spectrum, you say, you know what, like, let's just let the free markets decide, let the entrepreneurs decide what they're going to pursue, and, whatever happens ends up, as I said, the free market will decide, the entrepreneurs will decide what they end up pursuing. I'm interested in your thoughts on that.
Yeah, I guess from a global perspective, again, I think it's very important that we define those clusters and that Canada becomes known for, its expertise and success in specific sectors. The Canadian government did a fantastic job, as you mentioned, with, creating the 5 main clusters back in 2018. I think we need to continue on the same path. There's, sectors recently that emerge that are very promising. If you look at the success of companies like Shopify or Lightspeed and everything around retail and e-commerce, we're starting to be known globally. So I think we have to double down on that. If you look at fintech and payments, with the recent success of Verifin, that was just acquired by NASDAQ, or the IPO of Nuvei. There is a lot of, great vibes around, the fintech and payment sectors. And obviously AI is key. So I think it's the government, like they did in 2018, they consulted, main actors in the ecosystems, including, fund managers like us and the BDC. And I think they came with a great way to leverage the, what we're good at and make sure that we market that internationally.
Great. Okay. Well, listen, JF, thank you very much. It's been great chatting with you. I am going to exit now, and I know you are teed up to have a chat with Thomas next.
Great. Hello, Thomas.
Hey, JF, how are you?
Good yourself. Thanks for joining us. So, Thomas, we're talking about ecosystem and driving growth in the ecosystem. BDC has been instrumental in the last 20 years to make sure that we drive in the right way the startup ecosystem. So it's great to have you today. I think I have a few good questions for you. Given what I just said, how do you feel the VC ecosystem has evolved in the last 10 years? How has it changed in that period?
Absolutely. Thanks for that. And just a bit of context for those who are unfamiliar with the Canadian innovation ecosystem here. So we're part of the Business Development Bank of Canada. So if you're in another country, it's similar to another a government development bank. And there was a deliberate strategy about 10 to 15 years ago in which we need to support innovation, especially in the face when Canada for a long time, as you know, JF, wasn't really into innovation because commodity prices were very high. When oil was at north of $100 a barrel, the country didn't really prioritize innovation to the same extent as it does now. What happened was that the number of government programs, they're really focusing on building a cohort of world-class investors. That includes yourself and Janet and a few other funds in the country to really start identifying and supporting those startups and talent to help them scale. So the impact since 2008, 2009 has been this. In 2008, the 5-year IRR in Canada, the VC asset class in Canada was minus 7%. Now it's the 5-year IRR is at 12%. And just as a comparison, the 5-year IRR for venture capital in the US is 14. So we really closed the gap as an asset class. We have more funds, larger funds such as White Star and Real. Innovia is the big one, and Portage, they closed large funds north of $250, $300 million, well, even north of $500 million, which is amazing because for a long time in Canada, given the limited fund size, which was around 100 million Canadian, after Series A, it was very difficult to follow on. So I think walking into the crisis, Canada was doing very well and it attracted a lot of interest for it overseas. So last year, just before the crisis, more than half, about almost 60% of the investments were done by foreign investors. So they're seeing, they're actually putting money in an asset class that they can see that's doing quite well. Great.
And how would you say COVID-19 impacted this, great run that we've had in the last 10 years? What happened in the last 6 to 9 months?
So this was very interesting, and the data is still coming in, but there were several trends. One, those companies, as Janet was saying, in telehealth or those kinds of industries, e-commerce and such like Shopify, Dialogue, Wealthsimple, so fintechs did very well. They closed really large rounds. So those later stage companies, especially in those sectors, did very well. We did see a shift towards later stage companies. So there was a bit of a flight to safety, it seemed like, from the data. And so what happened, it's almost like if you look at the investment trends, it went up quite high just around May or June in terms of investment dollars. And then it kind of dropped right now. We're trying to better understand what's been what are we trying to, why is that might be the case? And so we are seeing some gaps. We're seeing some gaps around the Series A and C level. And I think, again, it's a flight to safety because people were concerned about more on the business model and less willing to invest on the uncertainty on tech. So right now, us at BDC, what we did is that in addition to we do about $200 million in investments, half of it in funds, the other half in direct investments per year. In addition to that, we also rolled out a $300 million bridge financing program that matched rounds. So if you raised 2 million rounds as a syndicate after February 1st, we would match that $2 million with a convertible note. And so if you see a big spike, a lot of it was also us pushing out dollars to make sure that startups had enough runway to get through this crisis. But right now, we're still examining the data to understand the long-term trends. Right now, long-term meaning the next 18 to 24 months. VC is a longer life cycle than other industries. So that's what we're trying to focus right now.
Right. No, I definitely saw this flight to quality as well. So very interesting. Are there any new sectors that BDC is interested in, concerned about?
Yes, so a great question. So it used to be 10 years ago, we have three direct funds. And so these direct funds were structured as would be essentially an internal GP, partners. They had like a quasi LPAC. They were incentivized on carry and such. So they've done quite well. And we spun off our IT and our healthcare fund, which is Amplitude Ventures, which closed their funds. I forgot, it was like north of 200 million or north of 150 million. So very well done. And then Framework Ventures, which closed at 100 million, 150 million. So they've done quite well. So we use our direct side more on the development. So development focus. So we created our Women in Tech Fund, $200 million fund that supports women entrepreneurs. We created a $250 million industrial tech funds to support startups more in line with the Canadian economy. Think mining, think oil and gas. And now we're particularly interested in deep tech. When I mean deep tech, we mean those technologies that are likely to have a transformational impact on the way we do business, which is quite cliched in venture. But what we mean specifically, think of quantum, think of photonics, think of advanced fundamental artificial intelligence, because Canada, again, ranks number 5. We're at the top tier in terms of research quality, but there's such a big gap in terms of commercialization. And there's a big concern from the ecosystem, repeating the story of what happened in 2008 when we didn't have much of a VC ecosystem, and we started losing a lot of our AI talent. So overwhelmingly, most of our top researchers in artificial intelligence are working for foreign tech companies. So they're getting the IP, they're getting the headquarters staff. So it's great they're creating jobs, but there's a concern about this IP and the talent, which is why we're really looking carefully with a number of stakeholders on this deep tech gap.
Thank you very much, Thomas. This is very interesting. I mean, I think there's a need at the early stage for those deeper tech companies where essentially you have to invest without relying on much, commercial traction, but more on IP and all that. So that's very interesting. So thank you very much for joining us and joining me.
My pleasure.
Today. So I'll leave you with Philippe for the next interview.
So it's a real pleasure for me to present Phil Telio, who's quite the personality in the city and in the country. And Phil, if you have a chance, if we can next summer, is to come join Startupfest, which is one of the marquee events in the startup ecosystem in North America.
I prefer the marquee. I like that. It sounds great. I certainly hope that we can host the event next summer if all goes well and the vaccine pans out the way I think we all hope it will. We should get a chance to be able to hang out in a park together in Montreal next summer.
Yeah. So, Phil, why don't you give the audience a sense of why you created Startupfest and what was the gap it was trying to fill?
Well, we started Startupfest, 10 years ago. We just celebrated our 10th edition, but we really ran events for years before that. Before we even called startups, and they were just small businesses in those days. And really, the lack at the time was really quite simple. Entrepreneurs had no ability to pitch their businesses. There was very little investment taking place. Entrepreneurs didn't know how to present themselves or pitch. I would go to events in California, and it was like a show. And it really started with this very simple idea that Montrealers at the time, because we were really a Montreal-focused event to start off with, needed to learn that skill of pitching. And so it was a pitch event. We'd put 5 people on stage for an evening, and we'd get the BDC to buy pizza, and that was it. I mean, it was really just an educational session for everybody else in the audience. It's turned into far more than that, of course. We ended up by growing with the ecosystem, and we became the place for the Canadian ecosystem to come and hang out, meet each other once a year. Some people refer to it as the Christmas break in summer for entrepreneurs.
And I can just tell everyone, we've been a big supporter of the Startupfest because it really does bring together everyone, especially in Montreal in the summer, which is spectacular. But Phil, this year was very difficult for you and for a lot of other, kind of platforms and conferences who, one of the main value was meeting live. So how does Startupfest pivot this year in the face of COVID?
Look, there are certain industries that are hit far more difficultly than other industries. Of course, the event industry, as you know, this event is, has had to shift. And so people naturally moved online. Our event was supposed to be in July. At that time, we were actually in July of this past year, this is 2020, the government had temporarily opened things up and we could host small groups of people, 50 people at one point. It actually went up to 250 people before they eventually shut it back down. But at the moment that we were 50 people, we actually chose to run a hybrid event. And so we ran some content, yes, but our real focus was around the opportunities. At Startupfest, people come to win prizes, investment prizes primarily. And so we usually give out, somewhere in the vicinity of close to $1 million of prizes at the event. And so we really just shifted what would be our physical pitch competition online. That was really the anchor. We got hundreds and hundreds of applications because people were at home and they were able to take the time to prepare their pitch and submit it. So we pivoted to an online experience. We tried to stay real to creating opportunities and not just creating content, because quite honestly, content, especially now, all these months later, is abundant. It's not that's lacking right now in the market is content. And so we really pivoted in that direction. And look, we continue to have multiple plans into 2021. And some of it will hopefully include, physical gatherings. If not, we'll certainly do more things virtual.
And, given your stretch, given the kind of network you have and this, and how you're connected to everybody, what would you say has been the impact of COVID-19 onto the ecosystem?
There's lots of things I think that this has impacted. First and foremost is the acceleration to digital. Now all companies need to have some form of digital. Even restaurants, which were purely, other than those that were shipping out on DoorDash and Uber, now all companies have accelerated to having some sort of a digital offer. I think we're also far busier than we've ever been, despite the fact that we don't have a commute. We're actually doing more work, which is forcing organizations to really figure out how to find that work-life balance without burning out its workforce, and really force employees to take time off. I found that it's astounding. I got to tell people okay, take it easy. We're giving extra days of vacation over the holidays because people need to take a break. There's also, I would say, this move to being online. It's very difficult to have accountability. So managers need to find new ways. And so now everybody's moving to this standard OKR practice. And so figuring out how to define OKRs so that you can keep your employees, on track to delivering stuff. I also think that there's, new opportunities now that everybody's gone digital or going digital, is that there's new forms of getting funding. Organizations like Clearbank, like Janet mentioned, are doing, new debt vehicles. And because these companies have gone online, they actually have data to share with Clearbank. And so that's super interesting. And look, there's a reconsideration in general in the market as to what is really essential and important. And then last, I would say that there's now, a lack of serendipity. Where we would go to an event and we get a chance to meet new people. We'd be introduced by somebody who knows somebody. That's kind of gone away. And so these are some of the trends that we're seeing. We're trying to figure out how we can fill some of those gaps, like that last one. How do we recreate serendipity online while we wait to go back to a physical reality? But look, I think there's lots of positives. This acceleration to digital, is not something that people would have taken on to themselves, but they're doing it now.
Okay, great. Thank you for that. And I echo the same sentiments. And finally, just mindful of time, what would you say to our international audience about the Canadian market? What I say about the Canadian, look, Canada is generally risk adverse as a country, as a people. Sometimes this is a feature. It's why our banks didn't collapse in 2008, because you're generally risk adverse. And we were able to pivot to things like grants and CERB and stuff for our workforce during the pandemic so quickly because we have few national banks, and so payments and payment authentication could happen really quickly. Businesses could very easily get access to funds, and that really kept us afloat. On the other hand, being risk adverse makes it hard for some companies to grow. When things are abundant, uncertainty is fine, but we can roll the dice many times. But when things are scarce and risky, uncertainty is really an awful thing. So I think Canada has been able to provide
a certain amount of certainty to businesses during this period of time. The growth of an organization like Shopify, which is really second to only Amazon in the e-commerce space, is really a landmark event for Canada. We no longer need to apologize, I think, or be so humble. I think we can be far more brash. But I guess that's what I would have to say about us today. But things change on a regular basis.
Great. Thank you, Phil. I'll turn it back, I guess, to the group now, right? Turn it back to you.
Fantastic. Yeah. Well, yeah. Now we're gonna pull everybody back up, and we'll take some questions. I've seen that there are some questions that are being asked, and now we're all back up on screen. Hello, everybody. Welcome back, Janet. Welcome back, Jean-François. Well, that was a lot of fun. I love this format because, well, for a couple of reasons. First of all, it gets us, a real, 360 degree of the startup ecosystem. I consider myself a community person, and I got to interview, the leading seed stage, investor here in Canada. And then, Janet got a chance to interview one of the leading VCs, of course. And then, the BDC gets interviews as the, one of the leading LPs in the country, as well as being a VC. And then I get, secondly, I get this, beautiful opportunity. Instead of having to be the interviewer of everybody, I get interviewed by, Sir Thomas Park. So thank you very much for everybody for playing the game with me. Look, we have about 15 minutes left. I've prompted people to ask us questions, and thankfully some people have asked us questions. There's actually quite a few. So I'll just start with the first one that we have here from Camilla, who wants to know what can the government do from a regulatory and policy perspective to support startups? And anybody can answer this question, by the way. It's now open to all of us. So who wants to take that one? What can the government do from a regulatory and policy perspective to help? Anyone? I'm going to call on somebody.
Okay, I'll jump in. I would say the biggest thing is something that has been talked about, and that is open banking. I think I know it's something that is being looked at right now from the Canadian government, as well as obviously other governments around the world. And I think that enabling open banking will greatly facilitate the growth of fintech and other companies that can benefit. Absolutely, it needs to be done properly and a lot of things thought through. But I think that open banking would definitely be a boost to many of our startups.
Fantastic. Anybody else want to tackle that, or should we move on to the next question? Okay.
Yeah, maybe I could say a few words. I'd say that the government should support education as well as immigration with a flexible immigration policy. I mean, going back to the fact that what we need the most is talent, and people that have scaled businesses in the past. Sometimes, some of those peoples, we need to attract them from abroad. So anything that the government can do on that front, I think is favorable for the ecosystem, and obviously education to make sure we have, the next generation of workers.
Absolutely legitimate. Thomas, I'll spare you from answering that question, given that the BDC is a Crown corporation. The next question is actually one of equality and diversity, and I know the BDC has a fund specifically for this. So maybe, Thomas, you can start by answering this, but how can the ecosystem attract more women founders to be interested in VC financing?
Great question. I think there's, and I lead the D&I initiative at BDC Capital. So there's a few things. So one, we do things by writing checks and specifically asking that women comprise the senior management, so we can build a cohort of women entrepreneurs and investors. That's critical for us. The second thing we're doing is also getting the data. And so we're looking at ways we just joined the new ILPA's initiative on D&I, where we're going to be asking data on the portfolio companies and in the funds, and then asking, well, what are you going to be doing to improve the situation? And it's more on the I and less on the D, but it's still just as critical, getting the data. I think the third thing is what we can do is de-biasing. I just had a fireside chat with the chief diversity officer of the Carlyle Group, and they are very serious about this because they believe that there's an equity component, doing the right thing, and then there's a returns component because we are all in the business of finding market failures, which is very much this is the case. And so debiasing, let's say, a lot of your, let's say, job postings, right? And so if in the job posting, you really detail how committed you are to the diversity, how important it is for you, and what you're doing about it, you see a significant increase in applications by women and by minority individuals. And I think these three things, showing that, yes, if given opportunity, and I'm nearly 100% certain this will work, people can succeed if given the chance. 2, this is the situation to get the data. And then 3, this is how we're implementing especially on the micro level, so people feel welcome.
And Janet, maybe I can ask this question of you: is how do we inspire more women to get involved in investing? Because it still strikes me that when I look around the landscape of investors, it still seems heavily male dominated. Yeah,
absolutely. It's incredible for me. I won't date myself, but I'm several years out of university. I've had a long and varied career, and my time in VC has been far and away the most male-dominated role I've ever had, even though it's a long year since I first entered the workforce, and I've been now at Real Ventures for about 6.5 years. I think that a lot of it comes down to having women in the senior most positions. I think that too many people talk about it as, hey, it's a pipeline issue. We've been saying it's a pipeline issue now for 30 or 40 years. And what we know is it's actually not so much a pipeline issue. It's more a retention issue, and that the women are not staying in it. The women are not going after VC funding. And when they do go after VC funding, they do not get the funding at the same rate as males. And we also know that a business plan is sent to VCs blind if there's a female versus a male founder listed on the team as the CEO. The one with the male CEO on the team page will get significantly higher acceptance from the VCs. So, as I said, my experience has been that you need women at the top. Again, there's all sorts of data that shows that that once you have a woman, whether it's in the boardroom or whether it's a senior partner around the investment table, that is when things start to change. And so, again, I could talk more about this issue, but I think that's the one key thing that I have learned is you need the women in the senior most positions.
No doubt we could have a talk specifically on this. I wouldn't suggest that we do that with this panel here, but certainly that would be food for certainly a very long discussion. But thank you both for answering that question, and thank you for asking that question to the person online. The next question is, can you talk to me a little bit about what you feel are the best options for exits for Canadian companies, Montreal companies? We've had a few as of late. And so what are the best options, do you think, for exits for Canadian companies?
Yeah, if I can take that one, Phil. The best options for any kind of businesses anywhere is always a strategic sell. There's way more strategic sales than IPOs or to go public. That being said, the stock markets have been very favorable in the US and in Canada. With on the IPO front, there's this new structure called SPACs that has been around in the US for many years. We see a lot of appetite from institutional and retail investors for companies going public through SPACs. From an exit standpoint, despite the pandemic, it's a very favorable environment. And there's also, lastly, exiting to buyout fund or private equity funds that are interested to acquire control of businesses. We see that day in, day out constantly. There's a lot of capital at the late stage, going back to this flight to quality that Thomas mentioned. So there are plenty of options to exit. The most important point is just to grow your company and build it for the long term, and it should come naturally.
Great. Anybody else want to tackle that? Or we're all in agreement with Jean-François? There is another question here. The question is, any tips that you could propose? It's in French, actually, the question. Je vais la poser en question. Des conseils pour se préparer à une levée de fonds avec du capital de risque et pour rentrer en contact avec vous. So what's the best way, any suggestions, tips, tricks to raise money? And specifically, what's the best way to get in contact with?
Je pense pour moi, c'est très facile. C'est par LinkedIn ou c'est par mon courriel. Ou sinon, il y a aussi comme une adresse sur notre site sur www.bdc.ca. So you can find me on LinkedIn or bdc.ca, and we can more than happy to link you. But I'll defer to them on what to my friends here what is in a compelling pitch, because that's going to be really critical.
Yeah, so I would say, there's two things. First of all, it's like, how do you get in touch with the person? And then secondly, what do you say when you get in touch with them? In terms of how you get in touch with them, the standard wisdom is try to find a mutual contact, try to go through somebody else. Certainly going through one of their existing founders is a great way. If that fails, I would say cold outreach. I answer all my emails, or at least have somebody else answer them. So, I'm just a believer in, hey, if you can't get through them, if you don't have another way, then just cold call them via LinkedIn or whatever. Small little story on that. One of our most successful companies, Sonder, a unicorn, we invested in them because they just cold called us and it went into the hello@realventures.com email. So I'm a huge believer as a VC that you should answer all your emails. In terms of what you say, I think the key thing is to help them understand at a high level, it's really two things: why this can be a big business, why this can be huge, and then secondly, why you or your team are the right ones to build that business.
Fantastic. Jean-François, you certainly have an opinion on this as well.
Yeah, I find it's an excellent answer from Janet. I think, as she pointed out, it's all about making sure that you prove that the total addressable market is large. You also have to tweak your pitch depending on your audience. If you talk to VC funds, it's all about creating big outcomes. So you need a big market, a decent possibility to gain market share, and it has to be big. If you pitch to angel investors and all that, maybe you can tweak that a little bit. It could be things like the quality of the team, the unit economics, being able to build a profitable business. So you have to adjust a little bit your storyline. But what Janet said is very, very good, and obviously always come over prepared. So you have to do your homework on your industry, your business. So it's very competitive for capital out there. We see a lot of startups. So you have to come extremely well prepared.
So if I could just say one thing to give some cover to Janet, JF, just as a reminder, if this is new to the VC, this is an industry that looks at every 300 deals, they make one investment. And then there's a portfolio of about 10 to 12 investments. So you have a 1 in 300 chance statistically. So when JF and Janet say come prepared, it's really important you come prepared. So you're better than the top decile. You're in the top decile of startups. So you have to really believe in your business and the prospects and demonstrate why.
Yeah, and I would say one other thing is do your research on the VC to make sure you should be talking to them. And make sure that you're not wasting their time. Like if I get on the phone with an entrepreneur and they start asking me things that are on the website, I think why am I wasting my time? Do your homework, as JF said.
Yeah, no doubt we got to wrap this up in a couple of minutes. No doubt you guys are all very passionate people. You care more about just making money. Of course, that is your job as a VC, is to make returns. But, what else do you look for in a deal? Above and beyond, can we make money on this? What excites you as individuals, not necessarily as general managers or specific VCs? What do you individually look for?
I think
it's just making money is fine as well, by the way.
No, I think we generally speaking, I get excited about things that are businesses that are changing, the way we consume products, services, the way we we go through our lives. So I'd say it's I look at businesses a lot from the consumer lens. So it's about innovation,
change the world.
Change the world. I mean, in our case, it's change the world, but change it in a profitable manner. Like it's you could change the world and lose billions of dollars. So there's always a limit to the financial aspects are important. That's what I mean.
Yeah, and I would say, hey, it's something that is going to make a positive, large-scale impact in the world. And I know that sounds a little bit social impacty, but really, it's about having a mission. Because I think that if the company has a mission that gets people excited, it can also get the employees excited as well. And I mean, I can think of so many of our companies, but for instance, some of the ones that I talked to before, ClearBank, you look at like how ClearBank, it's clearly about helping entrepreneurs. It's about addressing this issue that women are discriminated against in funding. You look at a company like League, it's about making people healthier. You look at Benchside, it's about faster drug discovery. I think having that sort of mission, what I have seen is it really keeps the founders and the teams going through the tough times.
Look, I thank you all very much. We have to wrap this up. I could speak to all of you for another hour, no doubt. People would want to listen in as well, but mindful of the organization that we're helping out here today. So thank you all for all your effort, energy, and time and your insight. It's greatly appreciated, no doubt, by the whole audience.